In the world of artificial intelligence infrastructure, one company has seemed virtually untouchable until now. A Silicon Valley CEO has just drawn a line in the sand, publicly identifying what he believes is Nvidia's single greatest vulnerability, and more importantly, he has a plan to turn that weakness into his company's biggest opportunity. Nvidia has dominated the AI chip market with an almost jaw-dropping grip. Their H100 and now H200 GPUs have become the gold standard for training large language models, powering everything from OpenAI's ChatGPT to Google's Gemini. The company's CUDA software ecosystem, built over nearly 2 decades, has created a moat so deep that competitors have struggled to even get close. Market share figures in AI accelerators have consistently placed Nvidia above 70, sometimes even 80%. That is not dominance, that is a monopoly in motion. But here is where the story gets genuinely interesting. The CEO in question is pointing to something that financial analysts and Wall Street watchers have quietly whispered about for months. Nvidia's Achilles heel is not in its hardware, and it is not in its software. It is in supply. Nvidia simply cannot produce enough chips to meet the explosive, almost irrational demand that the AI revolution has generated. Companies are waiting months, sometimes well over a year, to receive GPU shipments. Hyperscalers like Microsoft, Amazon, and Meta are throwing billions at securing inventory, and still, the queues remain brutally long. This supply constraint is not a minor inconvenience. It is a structural bottleneck that is actively slowing down AI development timelines for startups, mid-sized enterprises, and even some of the largest technology companies on Earth. And that bottleneck, that very specific pain point, is exactly where this Silicon Valley executive sees daylight. The strategy being proposed is essentially a two-pronged attack. First, offer AI compute infrastructure that is available now, not in 12 months. By building or securing alternative chip architectures, whether through AMD's MI300X accelerators, custom ASICs, or purpose-built inference chips, companies can step into that supply gap and offer clients something Nvidia currently cannot guarantee: immediate access. Second, and perhaps more cleverly, focus aggressively on inference workloads rather than training. Training models requires those expensive, hard-to-get Nvidia GPUs. But running those models, deploying them at scale for real users, that is the inference layer, and it can be accomplished with a much wider variety of silicon. As AI moves from the laboratory into production, inference demand is set to absolutely dwarf training demand in terms of volume and frequency. This is not just clever positioning. It reflects a deeper understanding of where the AI industry is actually headed. The gold rush phase of building foundational models is beginning to mature. The next chapter is deployment, scale, and cost efficiency. Companies will not be asking which GPU trained the model. They will be asking how quickly can this run, how reliably, and at what cost per query. Nvidia is aware of these pressures, of course. They are not standing still. Their upcoming Blackwell architecture promises significant leaps in inference performance, and their NIM microservices platform is a direct attempt to own the deployment layer as well. But even Nvidia's most optimistic projections cannot immediately resolve the fundamental supply chain reality they are wrestling with. TSMC's manufacturing capacity has hard physical limits, and geopolitical tensions around Taiwan only add layers of uncertainty to that equation. What this Silicon Valley CEO is really telling us is something the smartest investors already sense: the AI infrastructure race is entering its second act, and the rules are quietly changing. Nvidia built the stadium, but the question now is who controls the tickets, the concessions, and the parking lot. In technology, the company that defines the category rarely controls it forever, and that is a pattern worth watching very, very carefully.